Hello traders and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, September 14th. All right, to close out the week. Good to be with you guys here this morning. Alan, Pooja, Steve, Tom, good to be with you guys on the back of the BOE interest rate decision. Some great price action in the sterling. The BOE, obviously we'll go over the implications of what they said this morning. On tap or on the menu rather for today, we'll have pound yen. We'll cover euro and Aussie, which are also the favored ones on dollar strength. And interestingly, as we noted yesterday, that those diverging dollar strength and weakness stories. So you have sort of trades on both sides. Kiwi yen and euro yen will just touch base on. Euro yen, just watching the daily charts right now, but still below that key resistance level. We'll review Euro Kiwi, which saw a nice little rebound, but also approaching near-term resistance. And then gold, Ethereum, and Bitcoin, both the cryptocurrencies, really getting a big hit, at least the two that we've been covering. So for those of you who've been trading those pairs at some interesting levels. All right, if there are any other pairs, as always, that you didn't hear or you'd like to review, feel free to throw them on the message board. It's sort of a little bit of a short list here today. Okay, let's jump right in. So let's start with pound dollar. Here's what the pound looks like post BOE. So the Bank of England obviously held interest rates at record lows at 0.25%. We got the 7-2 vote count. McCafferty and Sanders both being sort of the dissenters looking for the push higher in rates. But just some interesting commentary that continued to fuel. And although they held rates, you saw the sterling rally. They said that inflation is to exceed 3% in October. Remember, their inflation targeting is typically 2%. Also, you heard that eroding slack reduces tolerance for faster inflation, reiterates that Brexit is a main challenge for the economic outlook, says interest rate increase to be gradual and limited, but basically see scope for stimulus reduction in the coming months. So that basically still leaves the door open for a rate hike in the coming months, quote unquote, whatever the hell that means. At the end of the day, price action played out perfectly. We talked yesterday about the both in the webinar and in the report about 31.58. That was our bullish invalidation level. Obviously, you saw this quick spike here, went a little bit deeper towards the 50 mark, but really nice initial reaction. Obviously, this all happened really fast. Even if you bring this into a 60-minute chart or a 30-minute chart, even, I mean, it was super fast. But the fact that we got that reaction, again, continues to validate the upside bias. Now, the rally is now approaching an interesting level of resistance. So if you're holding longs based on the BOE rate decision or you got involved from last night, you want to be doing something here if you're trading near term. We're looking at, let me take you to the daily chart first. It's just a swing high they made back here in August, but I'm just using that as a marker to highlight the confluence region of resistance. And that's basically slope support off the initial lows that we made for the year, extended off the December high. Just touched it. We're experiencing that now. And then the actual median line we've been working with off the lows, that bisector, resistance, quick break and recovery, that converges on that same region. So you're basically looking at like 33.70 as sort of the initial zone. This thing, obviously, like I said, I still like the upside. I still think there's plenty of upside on the longer term. But you do risk some sort of near-term pullback just off this level at 33.70. If we clear this and when we clear this, you're looking for 34.80. It's the 50% retracement. And then the Brexit gap, which we still have never filled since, takes you to 36.76. Okay, and it's interesting that you're seeing this on the back of a, what could be considered a pretty decent rebound in the US dollar, right? You saw Aussie trading a little bit heavier. You saw Euro obviously was our favored move to the downside. So it really goes to tell you a little bit more about the underlying strength that you're seeing here in the pound. And again, I continue to favor the upside. Wouldn't get cute on the shorts, guys. Remember, this is a break of the weekly opening range. It's coming into resistance level. Even on a real near-term basis, if you want to try to get real aggressive with it, you could possibly try to get on the short side if it breaks below 70 for a little bit of a scalp, but I don't recommend it. even for a real near-term guy, I don't recommend it. I'd be looking for more pullbacks to get back on the long if you're not already holding a long on this. Okay, you're still, in my estimations, just my humble opinion, if you still think you risk a little bit of an exhaustion sort of spike, even if this were to push into the upper parallel to pull back, just on what momentum's doing. Typically, these BOE or these rate decisions, rather, you'll get the initial reaction, but if there's no fundamental underlying theme or shift and change in policy, a lot of times the markets will take it back. So I wouldn't get too excited about trying to chase this from here. Wait for a decent pullback before you take any further long exposure. If you're holding longs, 3370 is an area I'd start to shave some of that off. Questions on the pound or the BOE. We're going to go into the other pound crosses in just a moment, but I just want to make sure we covered all our bases here. Okay, we did get US CPI numbers as well this morning. I didn't really think they were anything of note. You got the core CPI, at least the year on year, coming in 1.7 versus 1.6. So it's a slight increase or a slight bump up. We were expecting a downtick from 1.7 to 1.6, so the fact that it held is decent. But there's really nothing here I think that's going to be too pressing on the Fed. Remember that the Fed is also their favorite inflationary metric is the PCE, the personal consumption expenditure. So I don't think anything here necessarily in CPI is going to be hugely impactful for the dollar. Okay, so still looking good. One other thing I wanted to note, since it is Thursday, it's the last webinar of the week, I just wanted to say, guys, the weekly chart, look for this as well. This is basically trendline resistance, just extending off the high from 2014. We looked at this yesterday. A weekly close, certainly above 3270, would really, in my mind, validate and really solidify a much more substantiated breakout. And again, that uncovered gap from Brexit, okay, still takes you to that 113.76 region. 136.75 region, excuse me. Questions, comments, remarks? Okay. So that is British pound. Next up, pound yen. We'll take a look at the yen crosses a little bit later, but here's pound yen. And I just wanted to quickly highlight this from where we were yesterday. So pound dollar, or this was the update from last night, pound yen. We were approaching into, whoops, not yesterday. Oh, this was from 2 days ago on pound yen. We were approaching into that near-term target at 146.73 into 147.16. I thought we could get a little bit more of a pullback off that region. Obviously, we've been talking about this for a while. We talked about the fact that this is a break of a 2015 multi-year long trendline resistance. It's obviously weighted to the upside. 100% move, or basically a measured move of the head and shoulders break, gave you a target of 146.71, and we noted that last week or earlier this week. Well, that held for about a day, and here we are pushing higher. The reason I'm not excited about chasing pound yen any higher from here on the near term is also just because of this confluence region here, guys. The 2017 high day close, which is no longer the high day, because obviously we just made a new high today. But the previous 2017 high day close comes in at 147.86. And then basic trendline resistance. I know it's a real subtle slope, but a basic trendline resistance off the 2016 December high, this year's high, kind of converges here. So I'll be interested to see how today's close looks. Still like the upside. I think there's plenty of room, on pound yen as well. Do I want to chase anything near term, new positioning from these levels? Probably not. Here's what it looks like on the near term picture. So again, there's that key region of resistance. You can see we were highlighting this as, look, an area of watch. It's a nice target for the longs, but be careful trying to chase it from here. 2017 high day close, or previous 2017 high day close, So I'll be looking for a resolution of this region basically. If we're closing back below 47 today, we'll look for a little bit more of a significant pullback. This is just a random line, and if it breaks higher, you're looking at former June trendline support, and that basically takes you somewhere in the range of 149.50. So again, plenty of room to the upside if we're able to hold that 47 handle today. Now, my concern on this is the yen, because again, it's been a little bit of a nice run, but you get those exhaustion pulls in the end. Typically, those tend to be a lot more mean reverting. So, use some caution on this. On the pound downside, if you're looking to play pullbacks, this is the one I would do it for real near-term guys. But the broader pound picture, in general, in my humble opinion, still looks constructive. Tom says gold. Don't know if you mentioned it. Yep, it's on the list, Tom. I got you, brother. Okay, so any questions here on pound yen? See how we open up the U.S. markets here. Look for support around 147 if this immediate advance is going to have legs to it. If it pulls back sub 47, I'd sit back on the sidelines and look for a little bit more of a corrective play to get long. Euro dollar, number 3. So here's the daily chart look like. Here's what euro dollar looked like last night. We've been following euro all week long. We pretty much nailed this after we ran into trendline resistance, which was awesome. The pullback, and we opened the week obviously just below that slope, or just above rather that slope support. The opening range took shape there. We saw the break yesterday. We said, look, that's sort of a nice play to the downside. And you're basically looking for a run lower towards that slope support that you see here on the daily chart. Intraday, we are coming against something near term. But I just wanted to show you on the daily chart the levels that we're coming off of. Certainly on the weekly charts, this is something I showed you guys earlier as well. Here's what the weekly chart looked like, just the significance of this level. Okay, that swing low that you made back in 2012, the upper median line parallels we just looked at in the daily chart. And last week, you saw a perfect kiss of it, literally, and a pullback. And then this week, we talked about looking for the fact that if momentum is able to close below 70, and if price is able to push below 87, I think it's 1870, I think it's 1869, which was the low that you made back here. Yes, 1869. So if you're able to close or push below 1869 on a weekly close basis, and we're able to make that push sub 70 in momentum, in my humble opinion, again, that would be suggestive that there's a larger correction underway. You don't want to get too excited about a longer term play because, again, this is a broadly constructive trade. Seasonalities are weak for the dollar heading deeper into the month. But the immediate focus for me as we close out the week will be on this key region. Here's what the daily chart looks like. Okay. If you take a parallel from here, and I don't want to start adding parallels all over the place because you could start to go overboard with it, but if you took a parallel from here, it does look like that might come in just ahead. I don't want to stress it because you haven't really necessarily gotten much pivots off that. Or you know what? I might leave that for now. Bring this up just a tad, but you get the picture. A little bit lower in euro before you start to come into anything really material as far as support concerned. As far as the trigger and momentum, we got that earlier in the week. We already pointed that out. So it's looking good for the decline on the euro side. That's all I can say. I still like a lower sub 119.10, that former high that you made here for the August opening range. And of course, again, looking a little bit lower towards basically the 118 handle will be your next daily level of support that you want to look at. Intraday, here's what it looks like on the 4-hour. Okay, just a near-term channel, and this is something I put on the charts last night. Just a near-term channeling action. And it's what happens when you get into real near-term price, guys, and you really zoom in. It enables you to really identify real more subtle slopes. that you don't really see on daily 4-hour or even 2-hour charts. And an example of that I just kind of wanted to point out because I got all excited when I saw it was this little pivot here. So trendline resistance off the highs, you'd think this is 2-point if you looked at it on a 2-hour or a 4-hour chart, but in fact, looking at it on a 60 or even a 30, you see 1, 2, 3 points of reference. And in fact, this is a confirmed trend line. Remember, 2 points always speculative, 3 points confirmed. So if I took this and extended it off of this low, didn't give me anything, right? Well, we broke through it. You didn't even see any pivots on it, so I didn't know what to do with that. But if I extended it off of this swing low, previous price action literally found the high right there, found the high right there. The break saw acceleration. We came back, tested it as support. So the pivot of the slope actually matched up really well with sort of a dip near 1826. So you're seeing that this decline came just pips of that trend line, and here we are taking back basically the whole decline that we just made. Okay, CPI numbers were basically fading. The market just faded that move. So the broader story remains, I think, again, my humble opinion is bearish. You could see a rebound in euro. That should be offered as short entries, in my humble opinion. Trendline resistance and basic channel resistance, I'll stay focused lower to the downside, basically well within this for now. You're getting some divergence here, okay? This doesn't do anything for the divergent signal. It's these two lows, which are very subtle in price, a little bit more identifiable in momentum. So yeah, it could see a little bit of recovery. I mean, on the swing side of things, we still do have that entry at 1940 for Jamie's short trade. So if we do get a little bit of a move higher, again, I do like that 1940 level a lot, as it is basically converging on both channel resistance, the downslope, and upslope, median line resistance, former support. Any questions on euro? At what level would you look to re-enter shorts intraday euro dollar? Pooja says. So I'm kind of with Jamie at this point in that if you're not already short, I kind of do want to see the upper parallel tested. So 119.40, the entry that he's looking at, I mean, that would be like a sort of fairy tale. It would be like a perfect entry. Intraday, let me show you what I would personally be looking at for my entries. This is going to get messy. Just bear with me one sec. Whoa. That might be, it's not a parallel, but let's see how close it is. Yeah, so this is what I would say, Pooja. Again, it's tough to call a fresh short entry from here. I do think you get a little bit more of a rebound. But look, this is like real short-term price action. A real tight stop for me, you know what I mean? A spike back into this region, into the US Open, see if it holds. Literally a stop against the Asia high is all you have to do, or the European high. Real tight stop to see if you get the whiplash play. If it breaks higher, I think we're right on with the entry for the swing trades. You have to look at 1928, 1935. Would just be a basic pivot 38.2 retracement of the decline and the lows from here. So maybe a little bit ahead of that. If you're trying to play this real near term, you don't need to wait for the full extension to 1940. But this kind of price action, even if we were to dump back into the lows here, you know, if you're comfortable putting a stop way up here, that's fine, I guess. But ATR isn't all that huge right now, so I wouldn't get too aggressive on it. Honestly, if this thing dumps lower real hard, um, it might be opportunity actually to fade it for a near-term rebound in this before you get back on the short side. Remember, this is an objective break of the weekly opening range that we made yesterday. Here's your weekly open. You test the high. Well, we opened at the highs. We came back and tested it in Sunday, Monday. We slammed lower. We tried to make a rally towards the weekly open, couldn't even do that. Our bearish invalidation was up here at first. Once we broke that, yesterday we dropped our bearish invalidation again. And now we drop it again. 119.30, 119.27 is what I would like to see into 119.40, into Jamie's entry, I guess. This region right here is what I would like to see hold as resistance before we move lower here in euro dollar. Does that help, Pooja? It's tough if you're not already short on this. I'm not gonna sugarcoat it. But don't go chasing. Let's wait for a little bit better of an entry here. Any stop you take needs, I mean, ideally would be against 1940. So if you're okay holding that, that's cool. But the immediate focus still remains on that 1826. Again, that's just a 618. And you know how I love the 618s. Here's the low that we made from August the 17th. Here's the August open. So that's actually the August low. The entire August advance, 618 retracements, 1826. Lower parallel comes in just ahead. Pooja says, I was thinking precisely that if we got into 1825 or so to hold and maybe a long, but ultimately short. Yeah. I mean, you know my style. I'm super nimble. I'll switch, my trade direction in a heartbeat if I really think I'll get advantage of a nice little rebound. But yeah, I think I probe a little bit lower into this and a little bit of exhaustion play bounce. The only thing I want to say is what I was trying to remember to say earlier and I forgot. Because it's a weekly opening range break to the downside, you'd be looking at that Thursday, Friday low. That's just, objective. That's not, aside from Mike Boutros or Jamie, it's just what the opening range sort of strategy would dictate. So yeah, I do think you probe a little bit lower, but ultimately you're at risk here. And this was a beautiful setup in that it took a while. And that's why, momentum and all these studies that we do, it's just something that gives us hints about what could happen. You really need to wait for price action to speak. And once we got that reversal off that level was such a key level, and we saw that consequent or subsequent momentum break. And we noted yesterday that was an outside day reversal in euro. It's hard not to be bearish. All right. Any questions on euro dollar heading into the end of the week, heading into next week? All right. That is number 3. Number 4, Aussie looks like this. Flirting with a little bit of a disaster in my humble opinion. If you guys remember, we opened up the week talking about Aussie dollar coming off of major resistance. I'll bring you back to the weekly charts that we looked at. On Monday, here's Aussie. Basic trend line slope support off the lows from 2016, extended off that high. Saw we turned just ahead of it. And we touched it, kissed it again last week just before pulling back. So we were looking for a move into 81.68 inevitably, okay? But you're seeing that this high and this high, divergence in momentum on a weekly basis. And again, cited the risk for, it could get a little bit more of a pullback. Now, the near-term picture highlighted the immediate advance. And this is where the benefit of sort of multi-time frame analysis pans out. Pooja, which pair is that referring to? Oh, you're about euro. Let me look back in. I'm sorry, guys. Bear with me one moment. Who just sparked my interest on something here? 5 waves down. Could be. It could be. One thing I did want to check. Bear with me one moment. And this is what concerns me. It could be 5 waves. It could be an ABC, and there is it looks like a clean 5 wave within that A. If this is just correct, it would be 2 equal legs down. Still takes you down into that 18, that same exact level we talked about, Pooja. That same exact level we talked about. So if it was just an equal boom, 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 that would be the area of which you'd expect a little bit more of a sterner recovery, and then we need to assess again whether that's the play in euro here. I don't want to get increasingly bearish on the euro longer term, right? So hope that helps. Back to the Aussie. Sorry about that. I digress. Here's what Aussie dollar looks like again. So the weekly chart, just wanted to show you that on the pullback. As far as the intraday chart looked like, here's what the daily near-term slope turned just ahead of it. And on the immediate advance is what I want to say. Basic trendline support, a little bit of test and breakthrough. Former highs from last month converged right there, and that gives you 79.63. The intraday charts also highlighted the Fibonacci consideration there. Not really even Fibonacci, just half the advanced 50% retracement, 79.66. And the the monthly open comes in at 79.41, and that's basically a little bit lower from here. My point is, yesterday I was telling you guys in the report is, look, I still like the short side near term, but you're coming in some serious areas where I wouldn't be doing anything fresh short exposure here at this point. Because you have the monthly open just lower, you have the 618 just lower. It's a pretty tight range. So you're basically still looking for the risk of a possible drop near 79.13, which would be just 2 equal legs. But if the broader upslope in Aussie is going to hold, this is kind of what needs to be the level to hold right now. And if you recall in the Aussie update, on the 10th, on the 11th, right here, this was our bullish invalidation level. So right now, I want to see this hold. The whole objective start of the week was, look, there is divergence, especially on the daily chart. I was looking kind of tired, and we noted that last week. Again, we touched that resistance. So yeah, the risk is lower. But on the near term, you just want to look for the upslope, the immediate upslope, immediate support. And that's basically what we just touched today. Okay, so now you kind of want to curb your appetite for shorts. And I want to see the reaction. It's very simple. Downside play is done. Okay, even if we push lower below 79.60, like I said, you got the monthly open at 79.40, and then down into 79.20, you got that 100%, 618. It's just stacked. So I don't want to press any fresh shorts from here, because either one of those levels to the downside could offer some rebound. So long story short, if you're holding short still, take some off here. If you want to leave a little nib in on to try to see if you get the extensions into this region, great. If we close, today sub 79.66, I think that's, further fuel to the downside. If we close the week, I think you're in for a lot bigger of a decline. Okay. Long story. Let's see what happens here, especially into the U.S. Open around 79.66. Big level. Former swing highs, trendline support, 50% retracement, boom. Again, as far as trying to fade this, if you're someone who's looking to play the rebound, or you think near term we could take advantage of that, I'd be on my guard. Opening range break for the week, which was pretty well defined here, does keep the focus lower. Again, looking for a Thursday, Friday low. So, it could extend a little bit lower here into US trade, which is what I'd expect before you start to see any type of recovery there. But if we close the week below, it's a monthly opening range break reversal. There's your monthly open, stretch into a high, test the monthly open as support, that gives out, you're risking a drop down way lower. That's Aussie dollar. Any questions? Okay, let's run through the yen crosses real quick. I just want to touch base on these. I haven't had any exposure on this personally in my trading this week. Kiwi yen, I just want to show you that the resistance level at 83. We talked about 80.37 and 80.60 as being possible areas of this thing finding resistance on a pullback. The trade still remains constructive, and we came basically just pips of support just now. So I want to see if this holds. This is the only kind of Kiwi long play that I'd actually be super interested. I don't want to say super interested in, but if I had to trade a Kiwi trade, this would kind of be one I'd be interested in. I know Jamie likes the Kiwi dollar long, which has made some progress as well. I'll show you that chart in a moment. But as far as Kiwi yen is concerned, this was the region that we were talking about. And what I'm concerned about is that you kind of made a push through the 100 and 200-day moving averages and the median line. And then not only did you fail, even today, you stretched back into that resistance level, failed again, and pushing lower. Now on the near-term chart, again, bringing it back into the multi-time frame, that's just that slope support. Median line, resistance, resistance, break, saw acceleration, support. Just lower is a basic 38.2 of the advance. So you probably could probe a little lower, but I wouldn't get too excited, while above 79.50 basically. If that breaks down, well, then you're looking for a deeper play. But I think near term, we should be looking for some near term support here for a Kiwi rebound. It's just too clean for this to be a high, in my humble opinion. I could be wrong, but then the top side targets sort of shift back that same high, ultimately like 81. It's the yen cross. Trade with caution. Trade with caution. Euro yen, that's the one where I was really just wanted to focus on the daily chart. Here's what that chart looks like. In the event that you feel compelled to trade euro long, although we have talked about the euro dollar trade and we still like that, the fact that euro is coming in some near-term support and we could see a rebound off that 1876 sort of region, this could be the last stretch to push euro yen towards resistance. Remember, we talked about the 2016 high at 132.29 and just higher, that median line, longer term slope off of these highs. Now, if we just kind of scratch the longer term picture, I just want to see what this basic trend line looks like. Yeah, it still highlights basically the same region. So there's no immediate play for me here. I would be looking for sort of a stretch into another exhaustion high near that resistance level, and then possibly a more assertive pullback. So something that's on the radar, not necessarily operable right here in my opinion, but definitely something that's on the radar near term. Let's jump into Euro Key. Number 5, 6, and 7 is Euro Kiwi. Also an update from earlier this week. Back here on the 11th. Here's what Euro Kiwi look like. Is Habib in the room, by the way? No. So I got an email yesterday with regards to how to locate things. Guys, just wanted to give you a quick reminder. If you're looking for a specific currency, the search function works great now. We've been tweaking that for the last couple of years. So just type in euro dollar or Great British pound, US dollar, all caps preferable, makes the search function work a little better for some reason. But and it'll bring up all the corresponding charts. So we're talking right now on Euro New Zealand. Just type that in, and it's going to bring you all the charts that have been published on that pair in chronological order. Not only the charts, but also any webinars that mentioned it and any specific standalone reports. So, the easiest way to do it, if you're looking for a specific pair and you don't want to kind of go through the pages and look for them, just type in that search function, it'll bring it right up. So just a quick reminder there. Hope that helps. But for Euro Key, here's what we were looking at earlier. So earlier in the week on the 10th, when we were just starting things off, we talked about the fact that Euro Key was trading in this ascending channel formation, looking kind of tired, okay? And we were looking for the downside break of that move to give us initially 64, which should be support into the median line. So it's basically what we got, 63.50, 63.45, 64, that whole region. A day later, the breakdown started to materialize, and we highlighted this near-term slope, which gave us a little bit higher of a region, again, further highlighted, the region with this median line, which again converged on 64, 63.45. Okay, here's what it looks like now. We came down, we probed right into that region, 64, 64.45, we bounced, and now that rally, is testing the upper parallel. So if this breakdown is done, finito, if that's it, a breakthrough the weekly open in my mind, which sort of put the long side back into focus. Again, the reason I personally don't like this here right now is because you're sitting right in the middle of the weekly range. You never really got a clear opening range break here. I mean, you could call that technically an opening range break reversal, but I wouldn't really rely on it so much. Basically, what I want to see is if we hold in the U.S. Open trade today right here and start moving off, again, you're still looking for that. Whoops. You're still looking for that support now down here at 63.45 to break before you get too excited. Daily chart, still a super constructive trade. So that could be it. That could be all she wrote as far as the downside is concerned of Euro Key. And this is a favored pair for me in the face of Kiwi weakness, especially because the Euro short's in play. So if I do want to take a little bit more of a hedge stance on that, if there was one I would like to play on the long side, I think Euro Key is actually a decent rebound off these levels if we break this near-term downslope. So the way to play that effectively would be wait for the break, maybe resistance at the weekly open, pullback would need to find support back along that slope, and that would be sort of your launching point for the move higher. Yep, further validates. That's still going to need to be the zone. If this corrective and there's still more downside, you don't want it to surpass 65.16. And we had our bearish invalidation at 65.45. So just watch that zone as resistance. All right. That's Euro Key. A little bit of a trickier trade because you're seeing both of those diverging moves. You really feel the play here, but I don't want to get excessively bullish Euro just yet. So let's see what happens up here at 65.45, 65 level. So those are the majors that I've been covering, at least this week. It's been kind of slim picking still, but there are some decent plays if you're positioned early enough. The problem is that the plays have just been sort of taken off. So if you're not really paying attention, I wouldn't go chasing. Next up, I do want to cover real quick before I jump into gold. Ethereum and Bitcoin have been making outsizable moves, and they will continue to make headlines because, in my humble opinion, as I noted yesterday on Daily FX, there's been some serious technical damage. And we've been following these here as well. So the Ethereum trade is just coming into a major support target now, but the Ethereum trade first broke our notice back here on the 12th, right? We broke and we finally made a close below that 1295, excuse me, the 295 level. 295 is a basic 38.2 retracement. There's nothing magical about it. But the fact that we had that spike and push through that lower parallel, and this has basically been, the advance that you'd have to pay attention to. Really nice touches on slope resistance. Nice median line, parallel here. Break, saw reversal, saw resistance. So the fact that we broke here already had us looking bearish. We were looking for a validation break of 1295 just to confirm it. So you got that. Obviously, the break of just also a normal and basic trendline support further validated the move. And here we are coming into a big and really critical Fibonacci consideration. My favorites, if you hear me rubbing my hands together, the 100% extension of the decline off the highs and the 618 retracement of the ascent off the lows. If there's gonna be any type of rebound, this is where we should find it. And with the same respect, if we close below it, things could fall apart much, much faster. Okay. Now, I also just wanted to do a drill with you. Say that 3 times fast. If this is a basic, I don't want to say basic. If this is the ugliest head and shoulders formation, which some of them are super ugly, obviously. Okay, and we just mark it. Did I mark that already? Oh, I already measured it for you. If this is a basic head and shoulders formation, okay, a conservative measured move takes it down here into 167. And as I said, since I started publishing more, it's sort of been a double-edged sword. Since I started publishing more on Bitcoin or cryptos in general, I've just been bombarded by all the friends that you've acquired over the years in the desks and various desks in the city, and they're all going nuts, right? And even as it was breaking down, they were just, wetting themselves, wanting to get more long, and that kind of sentiment really is what gets you a little bit more of the conviction factor of, yeah, probably not the good time to get in. Everyone's still super bullish despite what price action is saying, and those types of moves are the euphoric moves that you want to basically fade. So, long story short, I don't want to digress. I'm sorry, I get really excited about these cryptos now. 234 is a critical region. Watch for a level of, or watch for a reaction there. If we break, like I said, there's probably tons of downside. The 100-day moving average comes in, or the 200-day moving average rather comes in at 181. Then the measured move, the head and shoulders break, would be 167. And that's sort of the end all game. If that breaks down, there's really nothing to take this thing down at like $50, which would be quite a sizable move there. So that's sort of the daily chart. Intraday chart's even more interesting in the fact that you have near-term structural support down there. So here's what the near-term chart looked like. We highlighted this pitchfork yesterday. Okay, this is a modified pitchfork from the decline off the highs. And certainly you saw the upper parallel catch resistance. We hovered kind of here around the median line, which converged on that 264, 271. That was a support level that we were focused on yesterday, the break, and here we are at 234. Also represents a near-term swing high just from early August, the August opening range high before we broke. So just below that, you even have slope support. So this whole region, and remember, when you're trading these kinds of currencies, guys, the cryptos, leave yourself cushion. They don't trade in a vacuum. A lot of breaks and pull-throughs and false breaks, and you have to leave yourself a little bit more of a cushion. Okay, they don't trade as clean as the majors do. Obviously, there's not as much participation, not nearly as much participation, and obviously the lesser amount of market participation you have, the unclear or the price action won't be quite as crisp, right? Because all we're doing when we're doing technical analysis is essentially the psychology of the market. Anyway, 234. Obviously, long story short, still stays bearish below 264, 271. That's now your near-term resistance level, and bearish invalidation for the broader decline now gets dropped to 295. Okay, that's the break we need to get to really validate any type of broader, larger recovery for Ethereum. But guys, that's not looking good. Not looking good. Soft targets on a break of this level, I had 211 and 171 before we get into that daily level we talked about. Any questions on Ethereum? Now, a lot of this is being also fueled by some of the headlines you might have heard of the last couple of days. I think I mentioned them yesterday in the webinar, so I don't want to get redundant. But basically, there's real concerns starting to become more on the forefront on the viability of really adopting such a currency on a global scale, and what kind of struggles or conflicts that would bring up. So call it a fundamental story, call it a technical breakdown. In my opinion, don't really matter. Price action spoke pretty clear. Interestingly enough, or I guess you shouldn't be interestingly enough, but as one would expect, Bitcoin has also suffered that damage, but a lot more so. This is the one that was specifically targeted in some of the comments made by Jamie Dimon from JP Morgan yesterday. The level of here that we were talking about was this Fibonacci consideration between 3,700 and 3,776. We came right into that region yesterday and bounced, but we closed below that confluence region that we talked about, the median line off the lows and the descending median line off the highs. Keeps the focus lower, push through this, the 50% of the entire yearly range. I'm lying. This is just the July open. You can't go back further in price, guys, without using algorithmic or logarithmic scale, rather. And if you do that, it's actually going to look obviously much different. But point being, 50% of retracement of that advance just from last month gives you 34.05. Just lower, you have that lower parallel. Okay, and that comes in with the 100-day moving average. That's, let's call it 32. 3,200, 3,206. Near term, Bitcoin, just as bad. I didn't really work this out in the near term levels, guys, but just as bad. If you give me a second, actually, I think this looks like you see some sort of channeling. Which breaking at this point wouldn't even be that good. Sort of, you expect to see further acceleration to the downside there. Yeah, so watch that. And the 618 will be pretty much just below. There you go. I mean, if this, yeah, it's sort of last ditch effort. Don't even pay attention to that at this point. Just its basic pivot in price. Basic pivot in price. Oh, one more thing. All right. So depending on where you are in time, consider that. All right. So for anyone trading Bitcoin, again, as always, feel free to take a quick snapshot of that chart if you need it for future reference. Don't have as much confidence these days in Bitcoin trading because the levels just aren't as clear. My preference always goes to the pair that gives me the cleanest price action. And I think on a relative approach, looking at both of these, Ethereum prices still remain much clearer. Much clearer. Anything on Aussie Kiwi if you have it, says Pooja. Yes, we will. Let me jot that down. We're running a little bit low on time, but let me just get the gold trade out first. That was 8, 9, 10 is going to be gold, and then 11 will be Aussie Kiwi. So that's what you said, right? Aussie Kiwi, yeah. And did we not cover euro, guys? I think we did get. Oh, I'm sorry, we did get euro. Um, Gold. So what can I say on gold? She's a trickster here. It's make or break. And this is what we talked about yesterday. It's make or break here for the near term picture. The long term picture still remains very constructive, in my humble opinion. Again, weekly charts really put things in perspective. As we started the week, we talked about a basic slope off the lows from last year's December decline. This year's low that we made in July, take a parallel off the high that they made there in April. So a nice key, perfect reversal there before pulling back. Um, Siri, I didn't say anything to you. um, so listen, it could get a little bit deeper. So this is what the weekly chart shows you, the pullback, right? The immediate approach shows us coming into a near-term support target on the daily, just off of this slope. And then obviously the Fibonacci consideration, which was a target on the way up, again on a closed basis, that converges with the monthly open. There's just so much here. I don't know what to do. It's at support. Okay, the pullback within the uptrend is at support. So typically, objectively, you'd want to buy here. Basic, right? But the dollar seems to be finding some footing. And if I take this to a near-term picture, it shows me that immediate advance gives me a little bit more room down to 13.11. Early in the week, if you guys remember from the open of the week, we were looking down here. That's where that convergence was with a basic high from last May. If I can find it, zoom. I can't go that far, of last year, and slope support. So here we are kind of dribbling lower. Now the good thing or the encouraging factors that we're seeing on the near term is that divergence, price action making a lower low, the oscillator not confirming that fresh extreme in price, and the fact that we're still not able to make any material closes below that zone. So I think gold is at a make or break level. I don't want to mess with it here. I think if you're holding short positioning, this is where you want to clean up the chart. It's a broad uptrend. It's really, you need to break that channel to get bearish. The only thing that we called was the pullback off of this region. Now I'm getting shy on the short side. I don't want any more short side exposure. If it breaks, great. That would suggest a bigger, deeper corrections underway. I'd look to reposition. But for me, I'm washing my hands of the short side for now. And it kind of made sense. Nice little pullback here with the dollar rally, the dollar, rebound. Yeah, it was beautiful. But how far do you want to take that? Dollar's still in a strong downtrend. Gold is still in a strong uptrend. Trying to judge the depth of the correction, trying to judge when the correction will end, that's kind of, fool's errand. So use caution on the short side. Look to stay constructive in the broader trade while above that trend line for now. Aussie Kiwi, Pooja, let's take a look. I'm going to be honest with you, I haven't really given it much thought this week. Let's take a look. You know what? I want to see what Aussie Kiwi looks like on the weekly. You do have some sort of consolidatory range that you've been in since like 2015. Remember that slope of influence we talked about from 2014? I'm not going to redraw all those. Not bad. No. Okay. So that's interesting. This whole 111 region, sort of a thorn in the side for the rally. Okay. So that's the weekly chart, Pooja. Just for your consideration there. Also, let's see if there's any confluence here from the entire massive decline off that 2011 peak high. See if we get any confluence. 236 is probably same spot. Nope. Okay. Levels to consider on the longer term approach. Aussie Kiwi on the daily. Here's your monthly open. You're basically unchanged on the month. You recognize that, right, Pooja? We are literally at the monthly open. So we made a lot of hoopla up top, made a lot of hoopla in the bottom, and we're unchanged on the month. So I don't really have a strong opinion on this. If anything, now that we've done that, push through, and back at the open, I think this is a clean opening range break. So look for the break of the monthly opening range to determine the next move. That slope that we worked with Puja for so many years, I'm not operating off it any longer. It's just been too many sail throughs. You know what I mean? So I'm not really going to stress that slope anymore. I'll leave it on for now, but for me, the opening range for the month is really all that matters on this. So that's what the daily charts say. Let's look at the near term. Put a gun to my head, I still like this higher longer term. That goes without saying. The question is, how deep is the correction have to go? And by correction, I just mean this decline off the September highs, whether it's done or not. I'm still not convinced. Yeah, it's just super ugly. Look, the only thing I want to notice is just that we're getting all these resistance levels that keep lining up right around that 111 level. I mean, here it's showing just ahead of that, the daily chart or the weekly chart. 111 is that 618 from the advance off the 2015 lows. So expect some pullback, like the long side, close above 111 in my opinion. I think you're back off to the races. Does that help, Puja? Does that offer any clarity there? It's an interesting trade. It's just that at the moment you're seeing both of those actually outperform because of broader dollar strength rather. Both of them underperform. So this back and forth action since the start of the month kind of has me kind of wanting to just clear this range, get it out of the way to get a definitive, more medium-term bias, and then you can get a little more aggressive on it. But for now, she says, "Okay, thanks. I was just confused. I don't blame you. I don't blame you. Last couple of weeks, price action hadn't been all that inspiring. So yeah, and that's okay. We just look elsewhere. I'm sure this will give us a little bit more clarity down the road." So, guys, that's all I have. There are no other questions. If you have any questions you want to cover real quick, feel free to throw them on the message board. If not, we'll wrap things up here. Again, I just want to encourage you guys. Tomorrow, I'll be doing a webinar on daily effects. It's just an educational webinar, just a 30-minute quick clip ahead of the Michigan Confidence Surveys, which someone else will be covering. But if you guys have questions here you get the whole presentation package. But if you have a quick question on anything, you want to drop that off to me tomorrow. I will be live in that session for half an hour. Otherwise, I'll see you guys on Monday for the free session, and then back here on SB Tuesday, Wednesday, and Thursday. Have a great day trading. Remember, we still have some data out on tap tomorrow, as well as UK employment numbers for the sterling crosses that we've been covering. So keep that in mind as we close out the week, and I'll see you all next week. Cheers.